Nestle India is considering small price hikes on its products to counter rising costs in coffee, cocoa and edible oils. Now, according to reports, the price increase will be kept as low as possible to avoid impacting sales volumes. Inflationary pressures have weighed on corporate earnings, with commodity prices soaring. And according to the Karnataka Planters Association, coffee prices have surged by up to 30%. Despite these challenges, FMCG brands are seeing early signs of recovery in urban consumption. Global coffee prices have reached multi-decade highs, and India is no exception. Nestle India's powdered and liquid beverages, including its Nescafe brand, contribute 14% to the company's revenue, making coffee inflation a major concern. Beyond coffee, other commodities such as cocoa, wheat and palm oil remain expensive, further pressuring margins. Nestle, along with other brands, is focusing on strategic stock management and cost efficiencies before resorting to price hikes. The rise in urban consumption offsets inflation pressures. However, brands remain cautious as sustained demand trends are yet to be confirmed. Meanwhile, hyperfast delivery platforms like Blinkit, Instamart and Zepto continue to gain traction, reshaping consumer spending habits. The upcoming income tax cuts in fiscal year 2026 may boost disposable income, potentially driving higher consumption. All right, let's talk to a consumer and trying to understand what really is happening in the Indian market. Subhash Chandra Garg is a former Finance Secretary of India, is now joining us live from New Delhi. Welcome to the broadcast. With commodity inflation rising, can consumers expect price increases in times to come?
See, there is hardly any option for the FMCG companies to hold back price increases. They have no leeway left, with many raw material prices rising, including tea, palm oil and other edible oils which go into it. And so that's hardly any choice. But what the difficulty they have been facing is that there is a demand contraction in urban as well as rural areas, thanks to very tepid growth of earnings in the Indian economy. We had very small growth of 5.4% in the second quarter, and the entire year also doesn't look very bright, going beyond 6.2 or 6.3%. So the demand being absent is constraining the companies, FMCG companies, from raising prices, which is reflecting in their bottom lines and their share prices.
Mr. Garg, now that you've mentioned FMCG, the FMCG markets are very cost specific and like to play in volumes. Will that strategy change in the face of supply chain disruptions in the country?
Yes, they've tried all tricks. They're cutting down the size of the packs for urban consumers as well, to get as many of them to buy with lower cash outgo at a point of time. So they are trying their best to sustain the demand, even with the lower packages and all. But the overall position being in a difficult space, with consumption growth in the economy being relatively quite, this year it was 7%, that was not bad that much. But until last year, for 3-4 years, the average was only about 4 to 5%. So despite their attempts to do everything possible, the demand pickup is still not that high.
Mr. Garg, there are concerns about inflation in India and globally. India recently announced income tax cuts to boost disposable incomes. Can this offset the rising inflation concerns?
It is quite possible, because this was aimed at that. But the base of the cuts, it applies to about 1 crore Indians. That's out of 140 crore Indians. So that is, their incomes will definitely improve, their disposable incomes. The big question would be that how much of that goes into consumption, and how much of that would be spent on share market or other savings. Indian middle class has been quite cautious consumer. They have not except the very, very high-end kind of discretionary consumption. Even there have been difficulties. So I think we'll have to watch where does this 1 trillion rupees equivalent of savings, which the income tax cut is handing over to them, goes in. We should also remember that even if the entire savings goes into consumption, for a 200 trillion rupees market, 1 trillion amounts to only about 5.5% or so. So it may make some difference, but expecting that it will be a game changer might be an overestimation or expectation.
All right, I've been talking to Mr. Subhash Chandra Garg, who's a former Finance Secretary of India. Mr. Secretary, thank you very much for your insights and for talking to us today. For all the latest news, download the WION app and subscribe to our YouTube channel.